Hey everyone, and welcome back to Invest, Build, and Prosper. I'm your host, Zach Matson, and today we're diving into a topic that's especially relevant and maybe a little touchy this year. Does politics really determine your success in real estate? It's a question that a lot of people wrestle with. Democrats say one thing, Republicans say another, but how does all of this actually affect your ability to make money in real estate? Today, we're diving into what really happens when politics and the real world collide, and why politics might matter less than you think when building a successful real estate business. Stick around. As we gear up for the big day, you're probably hearing all sorts of chatter about how this election could impact the housing market. Will a Democrat in the White House mean stricter regulations like rent control or taxing unrealized gains? Will the proposed $25,000 first-time homebuyer tax credit make a difference with today's high prices and high interest rates? Will a Republican administration lead to tax breaks for investors or laws being passed that reduce regulations? It's enough to make anybody's head spin. But what if I told you that while politics have their role, they may not be as crucial as you think when it comes to building a thriving real estate business? Today, we're going to start at the national policy level and then zero in on Boise, Idaho, a city that's been on the rise and is affected by these political winds, but also has its own unique dynamics. So let's unpack this. First of all, they do matter, and here's why in real estate. First of all, let's not pretend that politics don't matter at all. Government policies have a real impact on the housing market. Think about things like zoning laws, tax incentives, interest rates, or rent control. These policies can either help or hurt your business depending on the decisions made. Take rent control, for example. This sounds great for tenants, right? But it can lead to fewer landlords willing to rent out properties, reducing the housing supply. It also encourages landlords to spend as little money as possible on maintaining their property, which opens the door for substandard living conditions for tenants. Another example is strict zoning laws. They're meant to protect neighborhoods, but often make it harder to build affordable housing. In fact, I would say local government red tape is one of the biggest barriers to building affordable housing. The one thing that happened in my market, Boise, in the last year is they updated the zoning code. Boise took a common sense approach to zoning to remove some of the red tape and restrictions while also allowing for higher density, reduced parking, and more mixed-use developments. They still have processes to ensure safety and that housing projects fit the uses and designs of the neighborhoods they're in. They've just made it easier to get these projects approved. In a later episode, I'll do a deep dive on the new zoning code in Boise specifically and how I'm using that to catapult my business this year. Another popular restriction that some local governments implement is bans on short-term rentals. While the intention here is to open up that housing for regular homeowners to buy or to keep those rentals for long-term tenants, the intended consequences are that you have less investors willing to be landlords and short-term rentals are limited to hotels. It also eliminates the possibility for an everyday person to buy a house and offset that lack of affordability by renting to short-term tenants. And by driving business back to hotels, it's limiting their competition and allowing hotel room prices to increase. Let's take another policy proposal that at face value sounds good, but may have unintended consequences. The Harris campaign is proposing a $25,000 tax credit for first-time homebuyers. While this sounds great, the reality is that housing price points that the vast majority of first-time homebuyers are interested in have little to no inventory in housing markets. What happens when you give $25,000 in free money to 100 people to compete for one house? The one person that's going to be able to afford not only that $25,000 over the sales price, but another $25,000 on top of that is going to end up winning that offer. And that's the law of supply and demand. Without new affordable housing inventory, the incentive will quickly increase the price of housing over and above the $25,000 incentive. Well, that's great for developers like me that have houses to sell that we bought before this jolt in the market. In the long run, it makes housing more unaffordable, including the land developers need to buy, exacerbating an already untenable situation. While the Harris campaign also mentions tax incentives for developers and builders to build more affordable housing, the solution requires less regulation and red tape, something Democrats have never seemed to embrace. In the same breath, they speak of incentivizing developers to build more affordable housing, but also about placing rent restrictions and restrictions on who can buy real estate. This shows a complete lack of understanding of simple economics in real estate. And let's be honest, the proposal of taxing unrealized gains is probably one of the most ill thought out and idiotic policy proposals ever proposed. This further exacerbates the complete lack of economic understanding of this particular candidate and probably the administration before. There's also been discussions by Democrats in recent years to remove the 1031 exchange, which is key for investors to reinvest in real estate and defer their capital gains taxes. Without this tax incentive, it significantly reduces any incentive to invest in real estate, which would have significant negative effects on the economy as a whole. Let's break this down further by looking at a couple of hotbeds for real estate: California on one hand and Florida. These two states are on opposite ends of the political spectrum. In California, you've got one of the highest tax states in the nation, a skyrocketing homeless population, and an average rent that keeps climbing despite rent control and extremely tenant-friendly laws. And despite dumping billions of dollars into the homeless crisis, there are more homeless people than ever. Laws that favor renters over landlords have created an environment where it's tough to operate as a real estate investor. Now let's look at Florida, a very different story. Lower taxes, less homelessness, and rents that are still rising but in a more landlord-friendly market. Investors there have more breathing room because the laws tend to favor property owners. Over and over, I hear investors say they won't ever or will limit investing in states that tend to be very tenant-friendly. But I've never heard any investors say the opposite of landlord-friendly states. The fact is, tenants need landlords and landlords need tenants. There needs to be a balance in order for everyone to thrive. Laws that favor property owners allow for a thriving real estate market that allows for more competition and innovation in the marketplace. This competition and innovation is what allows for new products and services to come into the market and make housing more affordable. At the federal level, we've had two very different administrations in recent years, Trump and Biden. Under Trump, we saw lower interest rates, home prices climbing, real incomes climbing, but a general affordability crisis was brewing. And let's be honest, the shutdowns that happened because of the pandemic under Trump put a real damper on critical building supplies that limited much needed supply from hitting the market in a timely manner, limiting supply and driving prices even higher. Under Biden, we initially saw a continuation of rising home prices, but that quickly changed when unneeded government handouts led to skyrocketing inflation and, as a result, skyrocketing interest rates. Housing is more unaffordable than ever before as a result, and prices are stubbornly high because we still have the supply problem. Under the Biden administration, while incomes are up, they haven't even kept pace with inflation. What makes this situation probably most frustrating for people trying to buy a house, or even just trying to live, is there seems to have been no attempt at solving any of these problems. The thing is, no matter who's in office, there's always going to be challenges. The key is understanding how these policies might affect your business, but not letting them drive all of your decisions. And in reality, as a business owner or a real estate investor, you need to be able to shift your decision-making and practices no matter what is happening in the political environment. Now that we've established that politics have their place, let's talk about how to create a resilient real estate business that thrives regardless of who wins this upcoming election. First, diversification is key. If you're investing only in single-family homes in your local market, you're missing out on potential opportunities. Consider branching out into multifamily units, commercial properties, or even investing in other people's deals through syndication or notes. This variety can help cushion against political shifts. Next is the principle of adaptability. Stay informed about national trends, especially as the election approaches. What happens if capital gains taxes rise or if there are changes to 1031 exchanges? Focus on fundamentals. Cash flow, long-term appreciation, and tenant demand will always be your guiding stars. More importantly though, focus on local trends in your market. In Boise, for example, the new zoning code is allowing for many more development opportunities, large and small, from reducing restrictions on ADUs to maximizing large mixed-use developments. In our local market, we can adapt our strategy to focus on what is profitable rather than dwell on what some national policy may not allow for. Back on a national level, here's a scenario for you. If interest rates drop post-election, that's a prime opportunity to refinance existing properties, use that lower payment to boost your cash flow, or to fund a new investment. Now, here's a little secret that many professional investors know. Debt isn't taxed. That's right. Instead of selling a property to access profits, consider cashing out and refinancing or a home equity line of credit. You can keep your investment while still pulling out some cash. I know an investor in Boise who used this strategy during the pandemic, and it allowed them to purchase 2 additional properties without incurring huge tax bills. Let's shift gears and talk about the media landscape, especially in an election year. How often do you see sensational headlines about the housing market? It's like they thrive on panic. A good example right now is the shift in realtor commissions. But here's the truth. Unbiased media is a thing of the past. With each outlet pushing its narrative, it's crucial to get your information from multiple sources. For those of us in Boise, that means paying attention to local news, industry reports, and national trends alike. Beware of fear-based narratives. They can lead to impulsive decisions. Instead of reacting to every headline, rely on data and solid research. Focus on metrics like occupancy rates, cash flow, and market trends. Remember, in a week, we'll know the outcome of this election, but that doesn't mean your investment strategy should hinge on it. Stay grounded and make decisions based on hard data, not political drama. As we wrap up today's episode, let's recap. While political policies can influence real estate, they're just one part of a much bigger puzzle. The most successful investors focus on strong business fundamentals, adaptability, and a solid strategy, regardless of who takes office next week. So, keep your eyes on the prize, stay informed, and be strategic. Thanks for tuning in to Invest, Build, and Prosper. If you found value in today's episode, hit that subscribe button so you never miss an update. I'd love to hear your thoughts. How do you think this upcoming election will affect real estate in Boise or your area? Share your insights in the comments below. Until next time, keep building, keep investing, and keep prospering.